Hey, it's Mack with PriceActionTradingSystem.com, and it's Wednesday. It's May 13th. This will be our chart lesson for today, and another good trading day. Very similar to what we've seen most of the day in a trading range. Really, the whole day was a trade. It's just a two-tier trading range. There was a downward slant to it. We got the break here, moved to a new low, and then we just kind of chopped around the rest of the day. I'm still really impressed with the 6,000 volume chart. Um, this chart looks really good. It's very tradable, and so I like it. I'm gonna. I haven't been looking at a different chart lately, but I think next week I'm actually going to take off Friday, so I'm not going to trade Friday. There won't be any midday chart or anything. Of course, I hadn't been doing the chart lessons on Friday lately anyway. Probably won't most of the summer, but I'm going to take the whole day off. So probably next week I'm going to kind of watch them. I'm going to trade tomorrow, so tomorrow will be a normal day. But what I'm going to do is I'm going to go ahead and open up one slightly smaller and slightly larger. Uh, this one is fine, but it may not quite be the sweet spot. We might be able to eliminate a few bars of volume here. We'll just see. And it may not make any change. We may want to stay with this, but for now, I'm going to trade this chart. There's no reason you can't trade this chart. It doesn't move too fast. It it doesn't, um, it moves just about right. It's very similar to the old 2000 tick chart. I can't tell much difference, to be honest. But yeah, overall today it's just another two-tiered trading range, and we had a little failed break lower. But we also had, this is not really two-tiered. Notice how I drew the fact that we overshot here. Normally what'll happen is that means it's probably another tier to this thing, and you'll draw it at equal distance and you'll look for it to reverse there. Well, that didn't happen. It reversed right in here. There wasn't much evidence to show. There actually is a little bit of support right there. So it wasn't like you couldn't find that spot. You should have been paying attention to it. But later on in the day, you can see that was obviously a very important support area. And so that's the reason we didn't get through there. So this is probably maybe not, maybe it's two tiered, maybe it's not. But generally, that's when you shoot through and then you go through again, it generally is telling you, hey, there's another tier to this thing. Draw your equal distance and then look for that prices to try to trade to that. But we never could do that. We couldn't get below this right here. And so prices end up having to work really hard to finally make that new low, and then they couldn't sustain it. And if this would have been during a regular trading day, I would have said buy this and watch, and ride it back up into the trading range. But it's too late in the day, so most everything was down today. The bias was somewhat down, even though you really could have traded both sides of this. Notice I didn't trade a lot of to the long side. There's this one probably should be green here. Um, I didn't at the time it didn't. I didn't. I thought it was too risky, but looking at it now, and of course it's always easier to see it after the fact. But looking at it now, you probably would want to go long right there. That turned out to be a pretty nice trade. But that's a double test. Notice the new low, and then you tested it twice more, and you got a little trap there too. The fact that it ended as a doji kind of scared me away a little bit. It wasn't a perfect setup, but if you're being aggressive, you're probably going to want to take, you might even want to take that one and this one. So you probably would have taken every one of these. But anyway, let's back out and talk about the trades. When I came in, of course, here's your overnight low, your overnight high, and when prices are still in there and chopping around, that's generally a good sign that it's a trading range kind of day. And so that's the way I was looking at it. But early on, we were, we looked like we were just trending to the other side. You got a little channel working here, and if you draw your trend line, you got one coming up through here with a break and a new high. And that's a perfect one leg up, pull back, and a measured leg up. So now you're looking for prices to maybe do the same thing back down to test those lows. And so you got a little channel working here. Notice you pull back. You got a new high, pull back first entry, pull back second entry. So this is like a failed second entry long. Even though you could have gone long there and it would have worked. with that trend line right there, I think it's real risky going long. You just kind of wait and see what happens. And when it turned down right there, that's a good place to go short because you're expecting prices to work until you get a break of this channel and then maybe try a retest. And it did, but it went back to the high side before it. You really didn't make a retest here. It was what I would call a failure. It just worked higher. So failed second entry long right there, and then it pulls back. It was tempting to go short right there, but it's right into all that. It's right into all that support, and so I didn't like that. But when it went lower and pulled back again and failed right off that trend line, I liked it. And it's like a little trap, and it's like a breakout pullback short. And you're looking for prices to come down and test the lows, and that's exactly where it goes to. I don't think you could enter the next when it's too close. It's not a very good setup, that kind of thing. And then you get the break. It was really tempting to go long here, and I almost took this long, to be honest. But it's not a very good setup. It's risky, and and so what really bothers you is when you think about taking a risky setup and then you see it move like this. And somebody else asked me about this earlier today, and I answered them in an email. Sometimes you just have to watch those trades go without you, because what will happen is you'll not take it this time and you'll watch it go, and the next 9 times you take it, it'll fail every time, and that's what happens to people. So just because you see a good move, if the setup wasn't a good one, you did the right thing by not taking it. And that's the difference between a skilled trader and an amateur, is that amateurs just, it's like a shotgun effect. They fire away at everything, and some of them work and most of them don't. Well, you need to be just the opposite. You need to be firing away at the high probability ones that the odds are on our side, and watching the rest of them go, even if they go without you. And that's the case right here. And it was hard to sit through this stuff right here. It was very tempting to go short right here. If it hadn't been for that doji that ended on the inside bar, I probably would have gone short right there. Because you got your new high, you try to go higher once, you try to go higher twice, but look at all that support, and there's just not room. The only way you could take this was if you used a limit order and you could get in far enough back to where you could get your 4 ticks before it got to here. And if you did that, then yeah, you're okay. So I'll circle that one green after explaining that. But otherwise, you just have to watch it. And then notice we turn back down again, but then there's all that overlap, and of course it turned out to be another good trade, but I don't think you want to go short right there into that support, because you never know what's happening. What you want to do is let it go and let it come back and see if you can get a breakout pullback short, and that's exactly what you get right here. It comes right back and tests that breakout area, gives you a big bearish bar, and it's really like a pullback first entry, and then there's a little correction in there, and then there's a second leg, and there's a second entry. Now, if you're looking at this chart, it looks like about a third entry, but if you looked at the certain size chart, you could tell that's 2 legs up. But the main reason I like it is it's a big bearish bar right off the trend line, and that confirmed the trend line. So go short right there. There's plenty of room to get out before you get back to the low, and then it pulls back and tests it again and makes a lower high. I like that setup as well, and that turns out to be one of the better moves that you actually get a decent setup on, and you could have ridden this all the way to the low here, and very good setup. And then you get another one right here. There's actually a possibility to go short right here, but I'll tell you why I didn't like this trade. Looking at it after the fact, it looks like, hey, a great setup. But when you're looking at this, at the hard right side of your chart, this looks like a channel, and you can see that. And you move this out of the way, you don't want to go short right in there, because there's a good chance, even though there's a little double test of that area, you can't take that trade. If you just wait, you'll get a better setup. And what do you think happens? It breaks lower, it pulls back, and you get a perfect 2-legged correction. So you get a second entry short with a nice bearish setup bar, and you get the same opportunity and look at it go. And you didn't have to ride all that out and take a chance of having a bad trade and all that other good stuff. So I hope that's clear, and that's just a good example of what you're trying to do there. So nice setup and a nice move, and you should have been looking for your measured move here. I would have measured that, and that would have been one of my targets, as you can see. You got that target, and then I also would have measured on this one. I would have measured probably right here, and then measured down like that, and you can see that's a nice measured move, and it's probably going to be very similar to this one as well. Not quite, but when you're looking for this next leg, that's what I would have done. I would have measured this first one and then measured the next one, and it's a perfect measured move. So that was a great setup, and then but it didn't quite get to the measured move to the other side, so you're still thinking short, and you'd prefer to enter up here at the trend line. But when you get a double bottom and you get, so this is like a new low, first entry pullback, second entry with that big bearish bar, and notice where it came back just enough to get the break even stops, and it turns down, then it pulls up again and turns back down again. I really thought it was going to go to this side this time, so I like that one. Now let me explain this. The entry was when it broke below here. I probably would have used a limit order here, or either wait on it to break below this one and let it come back. But the entry is really here, and it's not a very good signal bar, so I would have waited just to see, and then when you got this bar, when it broke below it, I would have dropped a limit order in here, and it would have pulled back all the way. Looks like even maybe 3 ticks in that you would have got filled, and then it's a quick, easy scalp. It's not that hard to get, so I like that one as well. And then it bounces. And I already talked about it. It was tempting to go long here, but this thing has been all downhill. There's no break of this trend line. You know, I think you're better off to skip that one. Again, it turns out to be a nice trade. And it was really tempting to go short here, but you know, you got your break, a couple legs up to a new high, but this is an inside bar, and it didn't trade down near as far as that one, and that's all stem down there. So there's still some buying going on. There's still something not quite right with it. So just kind of sit tight, see if you know. You don't go long there, of course, because that's the first break. You're looking for a new low, but then you get a second entry counting off the high, and it's a little lower high, and it's a little lower close on that bar, and it's a big bearish bar, and that one turns out to be a really good one. And actually, there's a second opportunity to enter. If you didn't enter there, I don't think I would have added on here, but if you didn't enter there, I would have definitely entered right here on that failed second entry long and go and take that one lower. So there was actually another trade right there. Again, I don't think I would add on there because this starts to look a little congestive, and that's like a little breakout pullback short. And you know, it didn't go lower than that bar. It closed right on the low, but it didn't go lower. But yeah, if you weren't in yet, it'd be worth risking here because you're expecting prices to try to make a new low, and they're going to test this low regardless, most every time. Very rarely does it just reverse out of there like that. So good opportunity there to get a second chance opportunity if you didn't enter here. And then, like I said, you make this new low. That's like a double test. Then there's another little push lower and a test, but it's a doji, and it's a couple of ticks off the top, and it couldn't break higher than this bar. Let me make that a little bigger right here. So it just was a little suspect. It would have worked, but it's a real aggressive trade. And then when it pulls back, there's actually a little double trap right there, and this actual green is for the long here, not the short. I don't think you want to go short right there with everything being right into the EMA and a little bit above it after we've already been above it a couple more times here. So you just kind of sit and see if you get a trap one way or the other, and it ends up trapping everybody to the short side. So when it went out the high side, you can go long there. Again, it's a little bit aggressive, but it's something aggressive traders probably going to take. And then we we move higher. That was a nice trade, actually. You get a couple of points out of that. Easy scalp for sure. And then it comes down, makes a big move down. So now you got your close outside, a new high. But you don't want to take that first entry. Wait on your second entry, which comes right here. And this one was okay, but I still wasn't convinced that we weren't through to the downside, that we might go back up to the upper side. And so I just didn't like that one either. It's a pretty good setup after the fact. I'm thinking, yeah, you definitely should have entered. But seeing again in real time, I think you're better off to wait and see if you get a trap. And it goes lower, it pulls back, gives you that failed second entry long, pretty much confirms your trend line right there, and gives you a bearish reversal bar. Now you go short, and you got a clean ride down. Quick, easy. You get a couple of points out of a runner, and then it pulls back and gives you another second entry right off that line. This one went higher first and then went out the low side. There's just enough room to maybe scalp out there, so I like that one. Then it pulls back again. You get a break, but after we bounced there multiple times, I was a little leery of this one. And really the main reason, if you were still trading, you might take that trade, but this is into the 2 o'clock hour, so that's the main reason I didn't mark it. But you could consider taking that trade as well. It's not much different from entering right here, and actually you might get a tick better entry here than you would have over here. So, and there is 2 legs up. There's a move up, a little correction, then another move up, and then it turns back down. So if you were still trading, there's no reason you can't take that one. I'll go ahead and mark it, but I didn't mark it because it was after 2 o'clock. So that's what I saw today, a little 2-tiered trading range. And if you use your shorter term channels, you can see they all worked out pretty well. And so it was a pretty good trading day. Lots of entries, lots of good entries. And there's others on here that I talked about that were, you could have considered, but there's reasons to skip them. When you're getting this many trades and setups, there's no sense in taking the higher risk ones. You're better off to wait. But I hope everybody had a good trading day. Again, I'm really liking the 6,000 tick chart. I'm probably going to go ahead and open up maybe a 5,500 and maybe a 6,500 or 7,000 one and just watch them just to see. Felt like today we got a few more bars than normal. That's the reason I'm thinking that. But there's nothing wrong with this chart. This is a very tradable chart. And so don't be afraid to trade the 6,000 volume chart if yours looks like mine. So it's a very tradable chart. I'm still leaning towards it, but I'm still going to open back those others up and just watch them for a few days just to be sure, because we may have it down in the right area. We might be able to, we may not quite be to the sweet spot yet. We might be able to tweak it just a little one way or to one side or the other and make it even better. And so that's why I'm going to continue to look at them and just kind of watch them. So, again, I'll be back tomorrow, regular day tomorrow, but Friday I'll be taking off. So no midday chart on Friday, and definitely no chart lesson on Friday. And I'll be swinging my golf club, enjoying. Hopefully it doesn't rain. We hadn't had any rain here, and it's supposed to rain Friday, so we'll have to see. Hope I won't get rained out. But anyway, hope everybody's enjoyed their trading week. Hope you had a good trading day. We'll be back again to do it tomorrow. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.